What up, investors? It's been about a week since I've done a review of the account, so I think it's time. And then I'm going to briefly talk about like recession chances and the mood in the investment market at the moment. Or at least my rate on it. So here's the account here. I'm sitting on 178, 147. This is a lot lower than yesterday. As you can see, I am down like $6,000 on the day. So yesterday I reached a high of about 187 intraday, which would have put me up on the year actually. But alas, I'm down again. Now, I will go through all of these in a minute, but first let's just do a quick review of all the positions in the account. I will scroll down really quickly. You can pause the video player at any moment to try to figure out the exact positions. This is the equity side of it, 5 of them at the moment. I am margined out, so the total of the shares plus times the price will obviously equal a lot higher than this number here. In fact, if we go to the investment tab, I'll show you exactly what's going on here. You can see that margin used is $138,000 represented by this bar right here. Once it reaches 50%, that means I'm 100% levered. That means the account value, the market value of the account is double what the actual value is. So that means, I owe Robinhood $140,000. Got to pay him back somehow. So hopefully I use that debt productively and able to pay the interest and pay the debt back at some point. We'll see if that happens. This is the account based on total return, Apple Realty Income Main Street, which are my largest holdings. And then Smith & Wesson no longer has a $16,000 loss, neither does Paramount. They're both doing a little bit better as of late. Based on equity, Apple is my largest position, followed closely now by Smith & Wesson at $100,000, and then Realty Income, Main Street Capital, and then Paramount at the bottom. Even though Paramount is a small position, I have suffered the most losses on that position, which is an interesting statistics. So here's the account, 1 day, 1 week, 1 month. So I'm up on the month, 16% almost. 3 months is still in the red heavily, down 17%. Year to date it's getting better. I'm down only 4%, 4.33 on the year to date metric. And then on the 1 year metric, I'm down 11%, which I think it's still better than the market. Oh, look at that, it updated actually. It's 9.45. I think it's still better than the market. All-time chart, up 146. I started investing somewhere about August 28th, 2018. That's why there's a flat line before that, because there was just not a lot of money in the account. It's like a few $100 or something. So I started putting money in at this date here. So this is how it's been going. The high was about 214, I think, $1,000, and then the recent low was just below, I think, 140. Maybe I didn't drop below 140. So pretty wild swings here, mainly because I'm so levered. But, I've had many videos on how levered I am and my reasoning, so I'm not going to repeat that here. So next, what I'm going to do is relative performance. So let's see how the S&P 500 did based on the SPY ticker. So 1 day, it only dropped 0.75, so I'm losing big time on the day. On the 1 week, I'm winning. 1 month, I'm winning by, I don't know, like 6-7%. 3 months, I'm losing by quite a bit, maybe by 8%. And in the 1 year metric, I'm winning by about 5 or 6%. 5 years, I'm winning, by like 3 times, by 100% or so. So I made 3 times the money that the S&P 500 did. But I'm definitely losing as of late. I mean, the 3 month metric is really bad for me. So that real big drop in Apple has kind of, killed my account. Same thing with Paramount. So they dropped at about the same time, and I've suffered some pretty heavy losses. But not bad. If you want to look at some individual stuff, I mean, Paramount was down another 6-point-something% in the last 3 months, down 32%. It's pretty bad. It did have a run up in the week because news came out that, well, number one, the big major news for the company, for Paramount, was that, the Yellowstone got like 12.1 million, premier viewers or something like that, which is ridiculously high. And then the other news is that Warren Buffett decided to add to his shares instead of reduce shares in Paramount Global, which is a little bit of a boost in confidence for investors that are thinking of investing in the company and perhaps are wondering whether they should double down or not. And they take Warren Buffett's confidence as a cue, as a confirmation on the research they've already done, hopefully. Okay, so that's Paramount. If I go to Smith & Wesson, it's also experienced a little bit of a run-up in recent weeks, just like all the other stocks, up 11% on the month. But you can see the 3 months is down 22%. So I've had to suffer through this loss here. But, I have all the confidence in Smith & Wesson. I think that it's going to do all right. It's down about 50% on the year, but off of a really high level. I mean, the stock used to kind of chug along at around $10 and then experienced a really big boost in the 2021 run-up all the way to 30 per share, which is a lot higher than its long-term average. And now it's kind of been selling off, normalizing sales and whatnot. But I think the company's still really strong, even though it had a very small quarter, last quarter, in terms of earnings and revenue. I think that the company will recover, and the slowdown period is not going to last for too long. However, as I discussed in the beginning of the video, there's a lot of recession sentiment still around. Markets, even though they experienced a little bit of a bump in the recent week due to CPI or inflation numbers more broadly, there is still a downside risk. Just because inflation numbers came in favorable, it doesn't mean that the Fed is automatically going to start adjusting rates, rate increases, or perhaps even freezing them. So I think that they're probably still on a hiking binge. I'm expecting another 75 points next time, or at least 50. So we'll see what happens. But most importantly, I think it's going to be the language of the Federal Reserve, of Jerome Powell, and see where he thinks, the economy is going in his eyes, and what kind of path of rate hikes or rate decreases or freezes he's expecting the Federal Reserve to enact, in the future. So other than the Federal Reserve stuff, just browsing around Twitter. Twitter's been really fun for me lately. Like I've been, I don't know, for some reason, I've been more engaged in Twitter lately ever since the Elon took it over, for no apparent reason. I mean, it's still the same app, but I don't know. I think it's a more up-to-date, like, sentiment gauge, more so than even stock tweets, which I still visit, once in a while, maybe once per day, just to check out, like, what kind of stuff people are saying in the company whenever there's a big move. It's kind of really nice to see just on the surface what people are thinking about, or at least the ones that are active on the internets. But anyways, back to the Twitter thing, many people are saying how, there's still bond inversions that are predictive of recessions. There's still a lot of too much bullishness in the markets. People are still buying dips very aggressively and looking for any type of piece of news and an excuse to buy stocks. And so these are all very, very valid arguments, actually. Like, yes, yield inversions have been 100% predictive of recessions and whatnot. And also, yes, people do seem to be, trying to buy everything up, the little slightest positive news on the economy or on the interest rate front. And those are all fair criticisms. But on the other side of the argument, I think, is the fact that so many institutions and individual investors are holding on to enormous amounts of cash. Even people that I talk to that kind of are operating in the markets a little bit in real life, they tell me that most of them are like more than 50% cash. So and here I am levered 100% almost, right? So I'm actually in debt rather than in cash. Um, but they're telling me they're mostly in cash and they're kind of waiting for things to settle down, which is fair. But I think that not only is there a lot of cash sitting on the sideline, but also we're forgetting about the inflows, right? The inflows from all the retirement funds every single month, whether they're the market is overvalued and undervalued, money comes in and starts buying up the S&P 500, other indexes, bonds. So those things get bid up on a monthly basis. So the longer the market operators wait to make a move, the more the market gets padded with all these constant bids. So it's a little bit of an interesting environment. Um, Basically, the long-term trend is for stocks to get overpriced rather than underpriced. I mean, that's kind of like how it's been operating ever since the whole retirement fund stuff. So I don't know. My bias is for downturns to be short-lived and to be not, the longer they last, the less deep I think those downturns will be. But that's just the bias. I don't know for a fact. Obviously, there could be some events that shoot the market down lower significantly. Whether it's a hot inflation print at some point. I was definitely wrong about my prediction of a hot, October print. But we'll see what happens. And see, good thing I didn't act necessarily based on that. Like if I was acting based on my predictions, then I would totally get caught with my shorts down, right? And it's figuratively and literally. No, not literally. Well, depends if you're talking about market terms. Anyways, moving on. If I was short the market and expecting a very hot inflation print, then I would lose, right? I would lose all these bets, especially if I moved in size. So that's why the way I invest is not necessarily what I think is going to happen. Okay, so I have some type of process here that is somewhat independent of my opinion of what's going to happen in the market cycle. I think it's important for people to have some kind of anchoring mechanic to where they're not going or investing in size based on hunches or opinions of the markets. And like I spoke to somebody recently in real life, like one of the things that I assume when I'm investing is that the market always knows more than I do. And I think that's kind of a unique feature that not many people are assuming when they're putting down trades. Like any kind of piece of information that unless it's illegal, right? Other people know it too. Now, that doesn't count for everything. I mean, there's an entire hedge fund industry betting on the fact that there's information out there that is hard to acquire for the normal person, publicly available information. And so they have that edge, they have that research edge, right? So they have teams of researchers going down into the nitty-gritty and hard to find information that not everybody possesses, and they trade based on that. But the readily available information, like everybody already has it and has traded based on that. So like you need to have some kind of an edge that's different than that, right? So anyway, I think just to conclude and recap the point is like I think it's helpful as an investor to have some kind of anchoring mechanic so that you're not always trading on the whim. Okay, so that's my point here. Anyways, that's the account. Let me know if you have any questions or thoughts about it, what I've said, or the account, or if you have questions about the mechanics of the account or what I'm doing here. I'm willing to answer any questions. This account specifically is 100% transparent. So if you want me to cover any other tabs that you want to see or take a look at, I can do that. Or talk about any individual positions, I can also do that. I like to do shallow dives on companies, but I haven't done one of those in a while, maybe in a couple of weeks. But whenever I do have time, I will do that. Also, I don't know if I enjoy making shorts. I don't like looking at YouTube shorts. I don't like TikTok or any of that kind of like scroll through video style type of stuff. But I think I may just make some just because some people like to consume that type of content better. And why not expose them to some like 15-second financial tips that are actually helpful. So I may just continue to do that every once in a while. I made one today. So we'll see. All right, I'm gonna conclude the video right here. So I will speak to all y'all later, all right? Peace out.